The Iraqi dinar's historic reemergence on the global financial stage, a defining moment in currency history in the world of international finance. A handful of events stand out as true turning points. The introduction of the euro in 1999, the US dollar's transition off the gold standard in the 1970s, China's gradual opening of the yuan to global markets. Today, another chapter has been added to that short list. The Iraqi dinar, long absent from the global spotlight and the subject of decades of speculation, has officially returned to international currency platforms. After years of debate, rumor, and disappointment, the debate about the dinar's future is over. For the first time in modern history, traders across the world can now see the Iraqi dinar, IQD listed beside the likes of the US dollar, euro, pound, yen, and Swiss franc on respected systems such as Bloomberg, Reuters, and MetaTrader. Its reintroduction is not just symbolic, it marks Iraq's re-entry into the architecture of international finance. From rumors to reality, few currencies have generated as much speculation as the dinar. For decades, conversations about its potential value have circulated in investment circles, on online forums, and in private conversations. Some considered it nothing more than a collector's note, while others believed it held the possibility of immense wealth. Rumors of a revaluation appeared and faded countless times, fueling both excitement and frustration. But what separates this moment from the many false alarms of the past is the indisputable fact that the dinar is now visible, tradable, and integrated into global systems. Unlike past whispers, this is not conjecture, it is confirmed by hard evidence. Screens in financial hubs across the world now carry the IQD ticker, and liquidity providers have begun facilitating trades at scale. The shockwave in global trading rooms to understand the impact of this development, one only needs to picture a morning on a major trading floor. In London, New York, Frankfurt, or Hong Kong, the day usually begins with familiar patterns. Reviewing positions, monitoring established currencies, and preparing strategies. Suddenly, traders noticed a new entry flashing on their monitors, Iraqi dinar IQD. At first, skepticism reigned. Was it a software glitch, a mislabeling error? Yet confirmations soon poured in from multiple regions. This was no error. The dinar had been activated across platforms. Almost instantly, the mood in trading rooms shifted from disbelief to urgency. Phones rang incessantly, brokers scrambled for clarification, and automated systems began executing orders. Hedge funds and institutional investors that had prepared for such a scenario sprang into action. Veterans in the industry described the moment as one of the most surprising events in recent currency history, drawing comparisons to the debut of the euro. The sheer speed at which markets adjusted revealed just how significant this reintroduction was for global finance. Confirmation from the banking world adding to the credibility of the development, reports quickly surfaced of an internal banking memo distributed by a leading financial institution. The memo outlined 3 key points. 1. The Iraqi dinar is officially reinstated and active on international markets. 2. Central banks and top financial organizations are closely monitoring liquidity and activity. 3. Infrastructure has been prepared to facilitate conversions, trades, and large-scale transactions. This message gave institutional players the clarity they needed. The reintroduction was not spontaneous. It was the result of careful planning and coordinated agreements between Iraq and global financial partners. Behind the curtain, years of preparation, what many observers may not realize is that the groundwork for this historic return was laid long before today. Quietly, major banks established liquidity agreements, ensuring that the sudden influx of demand would not disrupt global markets. Exchange desks were prepared in advance to serve both institutions and high-net-worth individuals who had positioned themselves for this possibility. These measures reveal the deliberate nature of the rollout. The reappearance of the dinar was not a lucky accident or a chaotic event. It was a carefully orchestrated strategy designed to integrate Iraq smoothly back into global commerce while minimizing the risk of volatility. Early exchange rates and the shock of valuation when trading began, the numbers startled even seasoned professionals. Initial rates hovered around $5 per dinar, with some platforms briefly showing even higher valuations depending on liquidity and order flow. For ordinary holders of dinar banknotes, the implications were staggering. A 25,000 IQD note, once worth less than a cup of coffee, was suddenly valued at over $100,000 in certain trades. For millions of individuals who had held on to their dinar despite ridicule, skepticism, and years of waiting, this was the moment they had always hoped for, but few believed they would actually see. Global market reactions. The reintroduction of the dinar sent shockwaves across continents. Asia, platforms in Tokyo, Hong Kong, and Singapore reported unprecedented trading volumes. Algorithms struggled to keep up with the sheer number of orders, and in some cases, systems temporarily slowed as liquidity providers recalibrated. Europe, London and Frankfurt saw a flurry of activity, with veteran traders describing the surge as unlike anything they had previously experienced. United States, by the time Wall Street opened, the dinar was dominating financial headlines. Major news outlets shifted their coverage to provide live updates on IQD price swings and market impact. In just hours, the dinar transformed from an obscure, marginalized currency into the focal point of global finance. Analysts weigh in. With the world's eyes fixed on Iraq's currency, analysts and strategists rushed to offer their perspectives. Michael Anderson, London-based strategist, pointed to Iraq's stabilization efforts, oil exports, and monetary reforms as key reasons the dinar was able to re-enter the system without chaos. Sarah Lee, Hong Kong market analyst, highlighted the dominance of institutional investors in the first hours of trading, noting that liquidity levels far exceeded retail activity. Her view underscored that global banks had been prepared for this rollout for some time. James Carter, former U.S. Treasury advisor, delivered perhaps the most striking comment when he said, "This is not speculation anymore. It's policy." His statement reframed the event not as a market anomaly, but as a coordinated international decision with long-term implications. A personal victory for holders beyond the charts, graphs, and institutional maneuvers lies a deeply human story. For years, individuals who had purchased dinar often faced doubt or even ridicule from peers and financial advisors. Many quietly stored their notes in safes or lockboxes, uncertain if they would ever amount to anything. Today, those same notes have become legitimate assets, recognized and tradable on a global scale. The sense of validation for these holders is profound. What was once a speculative gamble is now a confirmed reality. Volatility on the horizon. Experts caution, however, that the first days and weeks of trading will likely be turbulent. Currency markets are inherently volatile, and the sudden addition of a new, high-demand currency only amplifies that reality. Price swings are expected to be sharp as algorithms, institutions, and retail investors all adjust simultaneously. Analysts emphasize that volatility is a natural phase of market integration. The true test will come in the weeks and months ahead, as the dinar finds a stable range, and Iraq continues to support its value through policy and economic growth. Structured exchange processes. Banks are already preparing for the next stage of integration. Structured exchange systems are expected to emerge, offering different options for both institutional and retail holders. These could include immediate payout programs, long-term contracts, and specialized vehicles for large-scale portfolios. The rollout of these services will be critical in determining how smoothly the dinar is absorbed into global markets and how ordinary holders will be able to realize the value of their assets. The broader impact on Iraq. The return of the dinar is not just a financial milestone. It is a signal of Iraq's renewed role in the global economy. With vast oil reserves, growing trade relationships, and gradual political stabilization, Iraq is uniquely positioned to leverage its currency's reintroduction into broader economic progress. The IQD's recognition reflects more than financial mechanics. It is a declaration that Iraq is reestablishing itself as an active participant in international commerce. A symbol of resilience on a symbolic level, this moment represents perseverance and resilience. Generations of holders who refused to abandon their belief in the dinar's future are now vindicated. Their personal stories, marked by skepticism, doubt, and persistence, add a deeply human layer to this historic event. The reintroduction of the dinar is more than numbers on a screen. It is proof of endurance, patience, and faith against the odds. Looking ahead, the coming weeks will determine how the global financial system adapts to the dinar's return. Volatility will likely remain high, but the undeniable reality is that Iraq's currency is back, visible, and tradable on international markets. For Iraq, this represents the beginning of a new chapter of economic opportunity. For holders around the world, it validates years of waiting. And for the financial community, it offers a rare moment that reshapes expectations and forces a reevaluation of long-held assumptions. A word of caution: it is essential to remember that foreign exchange markets are unpredictable. Prices are influenced by countless factors: geopolitics, economic policy, oil prices, and investor sentiment. Sudden gains can be followed by equally rapid declines. Decisions should always be made carefully and with the guidance of professional advisors. This development is historic, but it should be understood as part of a long-term process, not simply as a get-rich-quick opportunity. Conclusion: the dinar reclaims its place as the dust settles. One fact remains unshakable: the Iraqi dinar has reclaimed its place on the world stage. Its journey from obscurity to recognition is one of the most remarkable financial stories of the modern era. This day will be remembered not just for its immediate impact on markets, but for what it represents: the culmination of patience, planning, and persistence. The story of the dinar is still unfolding, but the foundation has been laid. Stay with IQD Global Intel for continuing updates, insights, and analysis, as this extraordinary chapter in global finance continues to evolve before our eyes. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.